We'll continue with our meeting. This is the second session for the day. This is on public finance. Well, actually, the second session in the afternoon. I'd like to welcome the Secretary for FST and his team, and they will be here to answer members' questions. Secretary, would you like to have any introductory remarks? I know we don't have a lot of time, but I will be very brief. This is about the Treasury and also expenditure estimates for the various departments. We are responsible for a few policy areas, and we cover revenue and financial control, provision of central support services within the government, and maintenance of government properties. I would now like to brief members on a few points. The estimated total recurrent expenditure for the three policy areas for 2017-18 is $7618 million, which is $365 million higher than the original estimate of last year, or 5%. As regards our work in the coming year, I'd just like to highlight the following areas. Public finances. We'll continue to align the growth of government expenditure with that of the economy and manage the allocation of resources, having regard to established principles for the prudent management of public finances, and continue to consider proposals on investment, loan, and enhancing our tax competitiveness to promote economic and social development. Tax Policy Unit. The FS announced in the budget the plan to set up a tax policy unit in the FST Bureau. On the one hand, we'll seek to align our tax practices with international standards and actively study ways to foster the development of local industries through tax measures so as to ensure that Hong Kong remains competitive and can create wealth. On the other hand, we'll enhance our tax regime and explore broadening the tax base and increasing revenue so as to ensure that adequate resources are available to support the sustainable development of our society. We're actively preparing for the setting up of the tax policy unit and aim to formulate its work direction and areas of study shortly. International tax cooperation. In the light of the latest international developments, we need to revise our strategy for implementing automatic exchange of financial account information in tax matters, or AEOI, so as to reduce the risk of Hong Kong being listed as a non-cooperative tax jurisdiction. We have just introduced into the Legislative Council an amendment bill which provides that with effect from the 1st of July this year, due diligence and data collection conducted by financial institutions in respect of accounts held by tax residents of jurisdictions outside Hong Kong shall not only cover confirmed AEOI partners but also prospective AOEI partners of Hong Kong. I would like to appeal to members for the support and early passage of the amendment bill. As regards the package to tackle base erosion and profit sharing, or BEPS, of enterprises, we plan to submit the implementation strategy and amendment bill to the LegCo in the second half of the year. Meanwhile, we'll continue to expand Hong Kong's network of comprehensive avoidance of double taxation agreements, or CDTAs, with our trading partners. So far, Hong Kong has signed 37 CDTAs. Government fees and charges. Policy bureaus and departments will continue to review their respective fees and charges in a timely manner in accordance with the cost recovery and user pays principles. In reviewing the fees and charges, the government will take into account factors including policy considerations relevant to the specific service provided, fiscal discipline, public affordability, and acceptability, and the views of stakeholders before making fee revision proposals. The government will increase fees and charges when necessary to preserve the revenue base. Government departments will also keep costs under strict control, reduce the need for increasing fees and charges so as far as possible, and ensure the effective use of our public resources. Government offices will continue to relocate where feasible non-location-bound government offices out of the central business districts to increase the supply of commercial floor space. To progressively implement the relocation plan of the three government office buildings in Wan Chai, the government is actively taking forward a number of new government office building projects. For example, construction of the West Kowloon government offices is in full swing, and the departments concerned are expected to start moving into the new office building in 2019. As for the proposed inland revenue tower in the Kai Tak development area, will adopt the design and build approach and have invited tender in January this year. With a phased relocation of relevant departments, will rent out the floor space released to progressively increase the supply of Grade A office space in Wan Chai. Upon completion of the whole relocation exercise, the government will consider putting up the 3 buildings for sale at the appropriate time. Colleagues and I will be happy to take questions, members. Chairman, we have 35 minutes for this session. I'd like to see whether all have pressed the buttons if they want to speak. I have 5, 6, 4 minutes each, including a reply. 4 minutes. Mr. Ronick Chan. Thank you, Chairman. 040, please. It is my question. The tax policy unit will have 4 posts costing $3.5 million from 2017 to 2019. I'd like to know whether that will be adequate for reviewing tax reform in Hong Kong. Will that help take the matter a step forward? Well, the tax policy unit is a new initiative, and on that premise, we are going to set up a dedicated unit. We have had resources doing this already, but we are setting up a dedicated unit to do some policy research. Of course, we will not be fishing for topics to do research. We will certainly look at more urgent topics first. The staff at the unit will include tax experts and will not rule out at the appropriate time seek talents from or seek the advice of the sector. In 2017-18, there will be the increase of 12 posts for the IRD, and you need $6.02 million more. But you also talked about tax concession for open-ended companies, and you are also going to have tax concession for airplane rental. And our main competitors are Singapore and other countries, and we want to narrow our tax differences between ourselves and Singapore. After you have this tax policy unit and the 12 extra posts, do you have enough manpower to do analysis into the differences between ourselves and our competitors? Well, thank you for the question. Of course, we are very concerned about manpower at the IRD, as I was telling Mr. Kenneth Leung in the last session. Very often, we need IRD input in many policy areas. When we increase resources, we need to be prudent while we want to achieve our policy objectives. We will be watching the situation. We understand that because of increase in international taxation requirements, we might need more people. But if really there is a need, we don't rule out increasing manpower. Another question, 048, CDTAs. I am actually going to ask a written question at the Council. In this reply, you have included certain information, but I'd like to ask whether you have any statistics with regard to CDTAs which have been signed with Belt and Road countries, or that there will be prospective CDTAs to be signed with Belt and Road countries, so we really know what kind of potential there is in this regard. Commissioner of IRD, please. Thank you, Chairman. Thank you for the question from Mr. Chen. As the Secretary said, we have already signed 37 CDTAs, out of which 16 have to do with Belt and Road countries. And then we have completed negotiations on another 3, and will need to complete internal procedures before they can be signed. And then there are another 6, the discussion of which has started or will be started. And then there are 4 which have been invited. So you have signed CDTAs with 16 countries. Yes. Next question, Mr. Kenneth Chan. Thank you. I'd like to follow up on 040 about the tax policy unit. I understand that you are going to set it up with deployment of internal resources, and it will be set up by civil servants. Then I don't understand why you have extra resources or you need extra resources. Secondly, how will there be division of work between this unit and the tax liaison unit? Because as you know, many tax experts from the sector and also FSTB, IRD staff are involved in the tax liaison group. Can you not combine the two? They are different structures, but then it seems they have similar jurisdiction. Who will take the question? Well, I can take the question. My understanding is that all along, the tax liaison group communicates with the sector to get their views if there is a proposal from government. But this tax policy unit works on more advanced work. We may need to work on certain topics for a long time. We need to do research. In the process, the liaison group will have a part to play, but we are going to spend more resources on advanced work. Mr. Leung, I'd like to ask the Commissioner of IRD this question. Just now, the Secretary said that with regard to AEOI, there will be the Amendment Bill number 3, which will be tabled. So that our financial institutions have to collect the information about tax residents from 70 tax jurisdictions. But recently, with regard to personal data, as you know, there is this leakage of personal particulars of electors. And I can't see how much money will be spent by the IRD on information protection or security. You collect the data of these tax residents of 70 jurisdictions, but you are not going to exchange them with other countries. You are just going to store them in your disks. What kind of security arrangements there are to reassure the tax residents who give you their information? Commissioner of IRD, thank you. About AEOI, as Mr. Leung has said, we have just submitted the amendment bill to LegCo to expand the scope and to cover another 72 tax jurisdictions. The members is concerned about the security problem. But in fact, we use a well-established system, and that is the common reporting standards of OECD. Every tax jurisdiction will have OECD experts sent to it to study their IT system to see whether it can comply with the security standards. We were looked at last April and we were found to be compliant. And in our data system, we actually get outside security companies to do an audit on our system. As I said, the OECD requires every tax jurisdiction to be studied. And if a certain jurisdiction doesn't comply with those standards, we will not exchange information with them. Mr. Wu Chi-wai. Thank you, Chair. In the past few years, the budget will reserve some money for particular topics. In 2014-15, you have set up the housing reserve, and then in 2016, you have got $200 billion to build hospitals, and in 2015, again $50 billion for retirement protection, and then earlier on, there was supplementary financing of medical services. And if you set up a fund, you can have interest. But then if you just reserve some money, there will be no basis to generate interest. My question is, when you decide to plow money into a certain topic, how do you decide on setting up a fund so that there will be interest and so that the fund will not be eroded by inflation, or not to set up a fund, but you only make a commitment?
Did the government consider how they can ensure the buying power of such allocations, and how to ensure income from interest so that the value would not be eroded over time? Thank you very much. We gave some examples, and as you said, they are not funds. The government is just planning ahead and estimating how much is required for the future, and that's why we set aside certain sums. For some of these projects, for example, for hospital constructions, we might be able to come up with more accurate projections. And even for the housing reserves, it's only a rough estimate. We have to assess the situation of the housing authority later on. So a lot of those allocations were based on early estimates. As some specific projects mature, the government will have a clearer idea of how much is required. So this is not a case of loss in buying power. Yes, I understand that, but for the housing reserve, interest can be accumulated, and the same goes for hospital projects. And we are simply talking about allocations without accumulation of interest. Our question is, why can't we accumulate interest for those projects so that in case you run out of money, you won't have to, they won't have to go into a war with the Treasury branch. So we are talking about two scenarios, one funds with interest accumulation and one without. For hospital projects, our provision cap is $200 billion, and this is same as the CWRF. If money is required, we will still pay out of the government's pockets. And when the expenditure exceeds a cap, you have to talk to the relevant policy bureaus. Yes, that's right. $200 billion over 10 years is a substantial commitment, and this is different from the housing reserve, which serves to save up. The government has not agreed or reached a consensus with the housing authority, and since substantial spendings would be required, we have begun to save up, and the interest from investments will continue to accumulate. Mr. Jiming, my question is on TSY 045 on the tax policy unit. And I'd like to know about the tax deductions for the industries to promote development. Would you consider Hong Kong manufacturers in mainland China or countries along the Belt and Road? Will there be any policy amendments for new legislations? For example, the new legislation against BEPS. Will there be any tax concessions for the purchase of equipment, and would these be studied? If so, of the details? If studies show that these initiatives can help promote the development of the industries, would the government make them regular by amending existing legislation or forming new ones so as to help Hong Kong enterprises so that they can take advantage of the Belt and Road Initiative? Secretary, I'm not sure if our tax specialist can answer that question, but I can offer a general response. We are more inclined to work on R&D first. I think this is about a fundamental change to our tax regime. So more studies will be required to learn from overseas jurisdictions to come up with something appropriate for our tax regime. And this is something we can work on earlier. As for your other suggestions, I cannot give you a stance on when or how they can be done, but we do welcome comments from the trade. Anything from the IRD? Mr. Ng talked about capital investment on intellectual property under the existing tax regime. Certain spendings on IP are tax deductible, and the financial secretary talked about 3 new such concessions, and I understand that other policy bureaus will introduce bills to enable these tax concessions. And as long as the Inland Revenue Ordinance is complied with, concessions can be provided. Mr. Jiming, I think you understand my question. As my predecessor, Mr. Lam Tai Fai, said, for EC, if the for IPs bought in Hong Kong but used overseas, it's rather challenging for them to enjoy tax concessions. So for the tax policy unit, after you complete the study, hopefully you can look into ways to help us. SMEs overseas are running into great difficulties, and we hope that you can help Hong Kong businesses in the context of the mainland policy and help us expand to countries along the Belt and Road. Anything in response from the Secretary? I've heard the view, and at this stage I cannot say whether this is feasible or not, but we have heard these comments. Mr. Kenneth Lau. I'd like to talk about the reply on FSTB 001 and 002 on the renovation of the government house. And the government house has over 150 years of history, and frequent maintenance is required. And according to the government, over the last 5 years, 1,665 repairs were made for a total of $29 million. And would special materials be required, since the government house is is listed as a historic building, and over the last 5 years, and compared with the official residences of 3 secretaries, and the cost on renovating the government house reached $6.44 million. Is there any way the government can cut back on these costs? Apparently, Mr. Lau is interested in the government house. And Mr. Leung, thank you very much. The government house is an official monument. That's why certain works are required. And over the past 5 years, in 2012 to 13, we renewed the structure for the slanted roof of the building, and we spent more than $6 million on this in 2012 to 13. So it was the most expensive maintenance item over the last 5 years. Compared with the 3 other official residences for secretaries, in terms of maintenance costs, in our reply, we listed in a table the floor areas of the CE's residence and the 3 other residences of the secretaries. Since these residences boast large areas, the maintenance costs over the last 5 years differed. if we divide the maintenance cost by the gross floor area, the average repair costs of these residences were actually similar. So the unit prices or costs were similar. Did you have to purchase some special materials in maintenance works? Since this is since these are monuments, we would follow the existing architectural style and materials, and we would try to use original materials where possible. Mr. Holden Chow. Thank you. I have a question on FSTB 040. In the reply, the FSTB will set up a tax policy unit to, and they will establish a work plan in the close future. Recently, I met the aviation industry, and I want to help them promote high value-added services. They hope to sign more CDTAs or double taxation reliefs with more countries. And with the setting up of the tax policy unit, can you speed up such work? For example, by signing agreements with countries like Australia and Brazil, would such work be sped up, and what is the progress of such work? The tax policy unit scope of work does not involve CDTAs or negotiations on tax requirements or regimes. And the Inland Revenue Department is responsible for these. That being said, we are very concerned about this issue, and we are actively trying to expand our network of CDTAs. And we are negotiating with different countries, so hopefully we can sign more CDTAs. I have another question on FSCB 028. The question was asked by Mr. Wong Ting Kwong. For a company's assessable profits and the tax positions of the different companies on the 3 years for the year 2015 to 16, for companies with assessable with profits below 5 million, you have a few thousand companies. But for the two previous companies, for companies with assessable profits under $5 million, the numbers were 105 and 103,000 companies respectively. The decline had been quite sharp. And did the government assess the possible factors for that? So you have very good observation. So can anyone take that question? Thank you very much. In the year of assessment 2015 to 16, we are talking about assessments in the financial year 2016 to 17 as of the end of February this year. And this is different from the two previous years. For 2013 to 14 and 14 to 15, the financial years were completed. That's why the number of companies were higher. But for the year of assessment 2015 to 16, the assessment works are still ongoing. And I expect the figure or the number of companies to go up. Mr. Wuchiwai, thank you. I asked about the allocations reserved. In 2015, we reserved $50 billion for retirement protection, and we reserved another fund for healthcare financing. And we haven't seen measures. Well, in the budget, allocations were mentioned along with the objectives. Would the government have any mechanism in place to manage the use of such allocations, to make sure that such allocations are spent according to the original purpose? And if there's any leftover provision, how would you deal with them? Would they be returned to the relevant bureaus? And how would you ensure that the original intent is met? For such allocations, and are they shown in the accrual-based annual statements of accounts in the Treasury branch? We looked at the relevant accounts and we did not see any mentioning of these allocations. How can you find these figures?
Secretary, let me try to answer. With regard to the committed funds, let us talk about healthcare reform. There was a figure saying that the healthcare reform might need such an amount of money because there will be tax revenue forgone and there will be other spending items. So you can say that it is a kind of financial arrangement or fiscal discipline commitment. So that policy will be supplied with that kind of funding. But then policies can change. The original policy might change over time. In the circumstances, the commitment may not have to be fully spent. It might not have to be 50 billion, but much less. When we deploy internal resources, we would know the commitment, but then if the policy has changed, we do not have to give the entire commitment to the new policy. So it depends. In the financial reports, this will not be found in the contingent liability, but you have to look at our footnotes. You have to look at our medium range forecast, and also there will be footnotes that would mention these. Well, I have read such reports, but I haven't seen the information in the footnotes. I'm not talking about medium-term reports. I'm talking about the accrual-based statement of accounts. Can we see that kind of financial commitments? Chairman, in the addendum to the budget, and when we talk about medium-range forecast, we do introduce commitments of large amounts. Say, for example, the FS has reserved money for education and elderly facilities. Those have been shown. Why don't you put that in the accrual-based statement of accounts? Because everything will be quite clearly listed and we will know all the commitments of the government. Well, if we talk about reserve funding, the idea is to give a policy the green light so that design of different systems can be done. But basically, it has not been approved. So the accrual-based account is of a different concept. Sorry, thank you for looking at me and allowing me to carry on, Chairman. Well, a commitment is a commitment, right? So if you put it in the accrual-based statement of accounts, we will know that that is a commitment. It's just like pension payments. You cannot be too specific about them, but still you make a commitment. And therefore, it should be included in the accrual-based statement of accounts instead of having to look up the medium-range estimates. Well, it depends on the extent to which the commitment is made. Say, for example, if it is just for internal reserve and reference, well, the policy is not ripe yet, and also it has not been approved by LegCo, so it is not contingent liability. If the LegCo has not approved it, we cannot say for sure that the commitment is or can be spent. Why am I asking these questions? This is because in recent times, we have been given the impression that you are playing financial tricks and you are hiding money here and there. In fact, you are putting money aside without having to do anything specific. So you have got the commitment for a particular year, but we don't know about the actual spending that will take place. And so the public do feel that this is a kind of financial trick. This may be done, for example, to lower the surplus amount for a particular year. I think this is not appropriate. Well, you are talking about your actual working, but he is talking about perception. Certainly, society asks government to make commitments, and we want to make such a commitment so departments can work accordingly when they formulate policies. In our budget, there is description of this at various places, and we are very transparent. We tell you how the money comes and how it goes. P.S. I'd just like to add one point to reassure Mr. Wu. This year, the reserved funds will not mean any discounting of the 2016-17 surplus. It is not a financial trick. Well, in the past few years, on such occasions, you may say you set up the housing reserve, and it is clear that by doing so, the surplus for that year has been lowered. But that I can understand, because you do set up a reserve and interest can be generated. So we understand it. But then you also give people the impression that you sometimes make a commitment to lower the surplus of a particular year. But it doesn't matter, Chairman. It boils down to that the commitments actually depend on what the policy bureaus want to do before they become real, or else the commitment has not a lot of meaning. Nobody wants to ask any other questions in this session. I will declare the ending of this session. The next one is on innovation and technology. It will start at 4:35. Thank you.